Well, a lot has changed since then, as you're well aware. So I'm going to talk to you today about what we've developed to make all your compliance problems go away, all your concerns. But to do that, it helps us to take a little bit of a look backwards and see where we're coming from. So this picture here describes what compliance has been like in our industry for the past couple of decades. By and large, we've been sleeping like a baby, okay? You had your practice, you were going about helping clients, and you knew there were certain things you had to be doing, and by and large, most advisors, certainly the advisors in this room, would be doing the right steps and taking clients through documentation and documenting the recommendations. But by and large, no one was knocking on your door to check. So life was good. We were sleeping like a baby. Fast forward to today, and I have a lot of advisors who come to me looking like this because they tell me, my gosh, I'm being audited. I'm being audited by FinTrack. I'm being audited by Fisco. Even some of the insurance companies I do business with want to come over or they're asking me to send them some documents. So what we want to do is make sure that you don't feel the shock and awe of getting surprised by some of these audits. I want to give you the tools, very simple tools, that we've just launched on Big that can help you take care of everything you need so that you can make sure you come out of these audits with flying colors, okay? So before I show you some of these tools and how simple it really is, just want to give you an idea of why all this is occurring. Because the natural question is, why were we sleeping like a baby before? And why is it now all these entities are coming out to audit us? And so it's a lot easier, I find, to adapt yourself to new realities if you understand why they're occurring. So if you look at this chart, this describes the hierarchy of compliance in our country right now. So at the top is the IAIS, the International Association of Insurance Supervisors. Okay, they consist of 140 regulators from 140 countries around the world. The IAIS was formed in 2008 after the global financial crisis, where one of the things that came out of that crisis is we learned that, consumers were buying financial products that they didn't quite understand. So the IAIS was formed to deal with that and to harmonize and set standards for across the world, across the planet. So what they've done, and I'll show you a snippet of this in the next couple of slides, but they came out with 26 insurance core principles. And you can Google this and look it up. IAIS, Insurance Core Principles. It's a document that's 403 pages long. And they go through each ICP and tell you what it's about. And they have meetings once a year, generally in Paris. And all the regulators from different companies, from different countries will attend and bring these standards back. Okay, so the ICPs are generally designed to ensure safe and stable insurance markets and fair treatment of consumers across all countries. Fortunately, Canada was audited in 2013 to see how we measure up to these standards, and we fared pretty well. Some jurisdictions did not. Canada is being audited by the IMF right now for adhesion to see if we have filled some of the gaps that they identified in 2013. Okay, so this is kind of coming from a high, as you can see. So next on the pecking order, we have CCIR and CISRO, but CCIR stands for Canadian Council of Insurance Regulators. So this is in our country. And here you have the regulators from each province who decided, let's get together and talk and make sure we're doing things similarly or share information across provinces. So it's important to note CCIR is not a regulator, but they are a college of regulators, and they're pretty much considered the highest law in the land in terms of setting standards. And then you have the provincial regulators. So Fisco here in Ontario, as of March this year, the new regulator in Ontario will be FSRA, the Financial Services Regulatory Authority, led by Mark White. He's the CEO. In my role as compliance chair for legislative affairs in CALBA, I get to sit at a lot of these regulator meetings, and they are having working groups. And fortunately, they're being very collaborative, unlike perhaps some previous regulators that kind of sat at the top and weren't quite aware of what was going around. So they're asking us, CALBA, Advocates, IFB, CLHIA, they want our feedback. And it's great to have a seat at that table so we can kind of set the narrative, okay, and bring our concerns and observations forward. So going down from there, you have the insurers, then you have the MGAs, and advisors, okay? You're the root of this tree in terms of engaging the public directly one-on-one. On the left and right, you see some players. You see the Canadian Life and Health Insurance Association there on the left. CLHIA, most insurance companies, 99% of them in Canada belong to CLHIA, and they will bring down best practices that the insurance companies are required to follow. Similarly, on the right side, we have CALBA that I just mentioned, the Canadian Association of Independent Life Brokerages. So just like the carriers have their voice and their association within CLHIA, the MGA brokerage place, we have our own association as well, because we need to bring our interests forward as well. Then the two blue ones off to the side, FINTRAC and the Office of the Privacy Commission of Canada. These are also very important elements in our industry. FINTRAC, of course, regulates the Proceeds of Crime and Money Laundering and Terrorist Financing Act of Canada, and they can audit you. Office of the Privacy Commission, that's federally in Quebec City, and provincially, each province has one as well. So looking at this, and I know this is a busy slide, but you kind of see what the hierarchy is, and you understand that the IAS is bringing standards across the world. And CCIR's job is to bring these standards into Canada and make sure we look very, very well. So of interest here, what I want you to take note of is, in this slide, who are the three entities that can audit you? Okay, so there's three of them. And the compliance program we've designed for you will allow you to deal successfully with each of these entities who may audit you. So first of all, we have FINTRAC, who can come in and want to review your anti-money laundering compliance regime. That is a physical document that makes a thud when it hits the table. We have a template for you to do to accomplish that. I'll show it to you in a little later. So very, very important document. They will come in and not only want to see that you have this manual, because they don't care what you know. Well, they care about the Proceeds of Crime, Money Laundering, Terrorist Financing Act of Canada, but they want to see your procedures of how you detect, deter, and report instances of money laundering and terrorist financing. Okay? So it's a very important piece of legislation, and they have had a lot of success. I know the first reaction I get from advisors, well, all my clients, they're not terrorists or money launderers or criminals. You know, I know we all think that. But when you actually get on FINTRAC's email list and bulletin list, you see that they actually make they contribute to making a lot of big busts in Canada. Amazing, like there was a lobster smuggling ring out of Halifax. I didn't even know that was a thing. They helped bust that crime ring. Drug smuggling, human trafficking, things like that. And it's amazing when you see the RCMP thanking FINTRAC for pointing them to the bouncing dollar that enabled them to zero in on this crime ring. $250 million crime ring, or something like that. So the message for you is, government loves FINTRAC, CRA loves FINTRAC, because FINTRAC isn't necessarily catching a lot of money launderers or terrorist financing, but they are catching a lot of tax evasion, which obviously our government likes, right? So they, if anything, they are being better and better funded each year. And many of our advisors can share with you that they were selected for audit by FINTRAC. Next, the second entity that can audit you is your provincial regulator. Okay, FISCO has become very, very active in auditing advisors and issuing fines. So you want to be ready for that. And by the way, with FINTRAC, they can ask to see your AML compliance manual, but they can also ask, and do ask, to see some of your client files to make sure you are properly identifying and screening people for AML risk. Okay, so twofold, your manual and your files. Similarly, FSCO, or your whatever regulator your province you're licensed in, they can ask to see your AML manual. Now, that's not their jurisdiction, but as a regulator in our industry, and the fact that FINTRAC, if you read the Proceeds of Crime, Money Laundering, Terrorist Financing Act, it explicitly mentions insurance brokers in it. Lawyers, accountants, we're all beholden to this law. We have to have a regime in our practice by law. If you don't have one, you're breaking the law. Okay, so because of that, the regulator will say, okay, we regulate advisors who are licensed, and this law applies to them. It behooves us to know that the people we are allowing to maintain a license is in adhesion to the laws of our country, including AML law. So they will want to see your AML manual. They don't necessarily open it because they're not qualified FINTRAC auditors, but they do want to see you have one. Similar to privacy. The Digital Privacy Act, and PIPEDA, okay? We collect as an industry more private information than any other industry in the world. You're collecting people's health files. You're collecting their financial details, their bank account information, their ID. And so we are fully directly accountable to privacy law. And as such, by law, you have to have a privacy compliance regime documented, makes a thud when it hits the table in your practice. And again, FSCO could ask to see that. Look, you're collecting a lot of private information on people. We want to know you have a manual that tells you and your staff the procedures you follow on how you collect it, how you protect it, where you keep it, and who you share it with. Okay, that's a requirement. So they can ask to see that, FSCO. As well, they can ask to see a general compliance manual, market conduct manual. We have templates for you to do this, and we've organized them in a very convenient way on Win Big for you. So those are two entities that can audit your practice. Just to finish off with FSCO, they can then obviously ask to see your client files and proof of E&O, proof of CE credits, holding out material, letterhead, business cards, things like that. Okay? So now who's the third entity that is actively auditing advisors? And this is nationally. So FINTRAC, and this one I'm going to mention, is nationally across the country, regardless of the province you're in. Third one is CLHIA member insurance companies. So many of you, I bet if I asked for a raise of hands, how many of you have received an email or a request from one of the insurers you deal with saying, we would like you to send us documentation on a case you just did. We would like to see your CE credits year to date. We would like to see a lot of other things, your compliance regime, your AML, things like that. Okay, so those are three entities that are looking at advisors right now. So again, why is this happening? The IAIS and the Insurance Core Principles, the ICPs that apply to us in Canada in terms of the last audit and what they're looking for today is ICP 18 and 19. So ICP 18, when they refer to intermediaries, they mean insurance company, they mean MGAs and brokers and insurance companies. And when they say supervisor, they're talking about the regulator. Because remember, this is international terminology. So ICP 18 says the supervisor, the regulator, should set and enforce requirements for the conduct of insurance intermediaries to ensure that they conduct business in a professional and transparent manner. ICP 19, conduct of business, the supervisor or regulator sets requirements for the conduct of business of insurance to ensure customers are treated fairly both before a contract is entered into and through to the point at which all obligations under the contract have been satisfied. So these are the two kind of main ICPs for Canada that apply to us, and this is what the regulators have a great interest in fulfilling right now. So one great example of this is in February 2017, CCIR introduced a new form that all insurance companies have to fill each year in May. And it is a monumental undertaking, well over 100 pages. And this form that the insurance company has to complete and give back to CCIR They have to answer questions about the policies and procedures that they have relating to how they're ensuring that consumers who buy their product are being treated fairly, disclosure practices, and about how they are auditing advisors. So basically, this annual statement of market conduct that each insurance company has to complete, they have to answer questions about how many of you they're auditing. Okay, they have to answer questions, you know, the regulator's basically looking at the insurer and saying, you are responsible to a very high degree for how independent brokers are distributing your product. It's not just you're responsible for the contract. You need to gather information about how advisors who are authorized to distribute your product are communicating with clients. What are they doing with clients? How are they representing your products? How are they conducting themselves? So I show this slide because some advisors will come to me and say, Canada Life wants to audit me. What business is it of theirs? They're not my regulator. Empire Life wants to audit me. Equitable Life's asking me all these questions about cases I did 6 months ago. Why is that happening? Oh, trust me, these compliance people at these companies, insurance companies, they weren't standing around twiddling their thumbs with nothing to do. Said, you know what, I think it'll be fun if we go out and audit some people. No, no, no. They were required by CCIR to do this. And some companies had to scramble. In fact, they were not able to complete the form last May. Okay, and that was fine, but CCIR is not taking any excuses this year. So now you kind of can understand why these insurance companies, they're not doing it to be nosy, they're doing it because they have to. So I know this is how you can feel, right? This old adage, trying to drink from a fire hose, it's all coming at me. And the idea here, and what we've always maintained at IDC, is I don't want to put a lot of regulators on stage who are going to scare you, talk about things that you've never heard of. We don't need to do that. We can keep it nice and simple and realize that there's only 2 areas of compliance in your business that you need to be concerned with. So I like breaking things down. 2 areas. The first area is what I call practice compliance. Do you have the required manuals, procedure manuals, in your practice? Okay, do you have an AML compliance manual? Do you have a privacy compliance manual? Do you have a market conduct compliance manual? And then the little things around that. Proof of E&O, CE credits, you're holding out correctly, things like that. Okay? The second part of compliance in your business is your client files. And so I'll ask for a raise of hands here. Has anyone heard of the approach? How many people in the audience have heard of the approach? Okay, we're getting up there. So my goal would be by next year, all hands go up. The approach should be something, maybe you don't fully know what it is, but you definitely heard of it. Okay, so the approach describes, and this was created by CLHIA with input from advocates and IFB and KALBA and other associations. It describes what compliance elements you should have in a client file so that you can pass an audit. Not just so you can pass an audit, so you can communicate clearly with clients, so that if a complaint occurs, you have all this documentation that says, look, I understand the client's not happy about something. No one's happy when the market corrects by 10% or 20%, but my client file demonstrates we went through a thoughtful process. The client understood the risks, chose something, and here's all the documentation that proves that. So there's 7 compliance elements that fit into the approach. And I know that sounds like a lot, but we want to get away from the days where when you look in a client file of an advisor, all you see is a photocopy of an application and maybe a couple of year statements, annual statements. Okay, that is something that will cause you to fail an audit. If one of these 3 entities that audits you looks in a client file and they see 4 out of the 7 requirements, you're probably okay. They might just say, you know, you should be doing this too. Okay, got it. Okay, so that's the message. So when I talked about the 3 entities who can audit you, FinTrack would want to see just your AML manual on the left side. They would want to look at your client files, but they don't care about needs analysis. They don't care about risk tolerance forms. They don't even care about disclosure. They want to look and make sure you captured the correct information on that client. And we have a new business checklist that helps you double check that regardless of what the insurance company's app is asking for, because sometimes they're outdated with law, that you're collecting the required information for a consumer. Fisco would want to see everything on the left, that you have it. and they'd want to look into some client files and see that you're doing a proper job with the approach. CLHIA member carriers can ask for any of the things on the left. Again, they don't delve into them too deeply, right? You may have some mistakes in your AML manual or some things that aren't quite right. They just will be happy you have one, okay? And they will want to look in your client files and see elements of the approach for cases you did for them through that insurance company. Okay, is that clear so far? So let's delve into the approach now, which is number 2 here, and see what's required. Now, some of this you already know, okay? You know about disclosure, advisor disclosure. That's been a requirement since 2005. I hope by and large we're all up to speed on this, and we understand that when we're in front of a prospect or we're in front of a client we haven't been in front of in 3 or 4 years, that we're laying down our advisor disclosure, because CLHIA requires us to give this disclosure to clients or prospects who are considering purchasing a product from us, so that the client, the consumer, knows this is who I am, these are the companies I have a contract with and I can distribute products for, here's how I get paid, here's how I manage conflicts of interest. So on our advisor disclosure template, on the back, we also have a privacy consent form that includes things like CASL, permission to send out commercial electronic messages, CEMs, all that stuff, so that when you're taking a client's information, you're being sure you're on the right side of privacy law. So that if I'm dealing with Greg and I'm collecting his information, before we even get to the point where we're putting pen to paper on an insurance application, I'm collecting a lot of data from him. His name, his address, his date of birth, his dreams, his goals, his financial data. I need his permission to collect that. And our consent privacy form on the back of our disclosure gives you that consent when the client signs it. Okay? Number 2 of the approach is an engagement letter. Now, what's the difference? Some people say, I thought I already gave them my advisor disclosure. That's my engagement. No, it's not. Your advisor disclosure says, Mr. Client, this is who I am. The engagement letter says, Mr. Client, here's the terms of our working relationship. Here's how we're going to work together. This is what I do. This is what I'd like you to do. Are we in agreement? Regulators love this form because it disarms misunderstandings before they occur. Because you've ironed out in writing what you're going to do, deliver to the client, and what you expect the client to deliver to you. So it's a much more living and breathing document. The client can say, well, my last person only contacted me every 2 years. I'd like to hear from you a couple times a year. Okay, we'll put that in, right? So the client is very much involved in this process, and we have a template for that. Next is fact-finding, right? You've all seen it. You all know about this. Some people do fact-finding on a white pad of paper. They have the questions memorized. Others have a form that they go through. So we have examples of that. Whatever you're using is fine, but just you need to demonstrate we went through some kind of an exploratory process. And during that exploratory process, we came up with some gaps that exist in the client's model. He might have an insurance gap. He might have an unfunded retirement need. That's when I move on to number 4 and pull out my needs analysis or retirement needs or risk tolerance questionnaire if we're going to get into the investment world. And we now quantify that gap. Okay, so we have a generic needs analysis. Many of the insurance companies have needs analysis. Depending on who you're dealing with, that's great. Just use something. And when you're using something, make sure you're using it right. Because the one thing I don't like to see is, I'm reviewing an application that an advisor submitted, and I see, okay, it's $250,000. The needs analysis says $250,000. Looking through the data, it looks like this client needed more. I talked to the advisors. Well, yeah, he actually needed $700,000, but he only wanted to buy $250,000. So I put $250,000. No, don't do that. Okay, what you want to do is have summary lines at the bottom, and our template needs analysis has this, where there's summary lines. And it says, okay, as of today, this is the client acknowledging on the form. I acknowledge my advisor suggests I need $1.1 million of life insurance. At this time, I currently own $500,000. Therefore, my net need today is $600,000. Next line, at this time, I have selected to buy 300,000, and I furthermore acknowledge the shortfall of 300,000. So now you're good, right? Now if that person dies and the family comes after you, you have proper documentation that says, look, Mom and Dad, I did suggest this amount, but we live in the real world and they could only afford this amount or they wanted this amount. That's not a crime. It's the consumer's choice. But I did provide the full advice. Okay, that's what a proper needs analysis should demonstrate. Number 5 is recommendation, some type of a summary document that kind of summarizes, okay, we went through the fact finding, we discovered this, we quantified it with a needs analysis. I'm suggesting you do this today. So some type of a summary. It can include illustration, obviously. It can include a brochure or a flyer outlining some of the benefits of that product. Okay, something that demonstrates the client understood what the bottom line of this recommendation was. And number 6 is the reason why letter, and that's probably the newest one. And it's not really a stupid one when you think about it. A reason why letter is a letter that you must deliver to the client no later than when they take delivery of their policy, that basically in a one-page layman terms summarizes why they bought this product. Mr. Client, as you remember, we got together, we did a fact finding, we decided to focus in on your insurance need, we discovered a gap, we filled that gap, we implemented this product because it does this, which you indicated was important to you. You didn't quite buy as much as you needed, but we'll review it next year. At this date, I'll give you a call. And by the way, when we implemented this product, we replaced another product because it was doing that, which is bad, and this one is better. Bottom line, if you have any questions, give me a call. That's a reason why letter. Regulators like it. I like it because we all know that 3 months after someone buys a product, they forget why they bought it. They don't know what it is, what insurance company it's with. All they know is you said everything's going to be okay if you buy this product. Well, the reason why letter kind of outlines why they bought it, okay? And number 7 in the center there is just your meeting notes, applications, product information, things like that, okay? That's the 7 elements of the approach. Now what I'm going to do, and we're really excited about this, you're just the second region to see this, and I know Kelly this morning would have talked about Win Big. So excited about this because compliance is changing at such a rapid pace now that me coming around once or twice a year to update you is not going to cut it. Okay, you need an online resource. We've got videos there, we've got material, we've got my video there. You tap to the right 2 times if I'm talking too slow and I can speed up or whatever, right? But it's such a great resource. I call this 2.0 website. Rather than the old websites, here's your menu, here's your tabs, go find what you're looking for. Big help. Type in your question. The best answers are going to come up for you right away. Okay? But on the IDC Institute, we actually put courses there and tend to be dogmatic. And with compliance, there can be a sequence to which you learn things. So we cleverly named the courses. The first one is called Compliance Training Session Number 1. The next one is Compliance Training Session Number 2. And so you get the idea. So, but what we're really excited and what we just posted is this one here, which is Compliance Course Number 6. So this, when I promised you at the beginning of this that we'd make all your compliance worries go away, everything you need is on this Compliance Course Number 6, Part 1 and Part 2. Part 1 is a presentation similar to what I've given you, but has a lot more meat in it. Okay? And there's a quiz at the end. Take the quiz, pass the quiz, get your CE credit for that presentation. I think it includes 1 ethics credit, Kelly, as well. Then, in Compliance Training Course Number 2, which is at the bottom here, and you can sort these, look at them any which way you want, search for them. So Compliance Course, I'm going to go into that one. So here you see the description, the CE credits, the objectives. I'm going to go to Course Plan. It's all there for you. So our AML Compliance Manual template, it's there in Word format. You just have to go through it. There's some guidance in the margins. Okay, this is Canada Life's template. They have some guidance. I have some comments as well. on areas you should customize, but go through it and now you have it. So that if you get one of those scary letters in parchment colored envelopes that the Government of Canada sends out with the red Government of Canada flag on it, and it says you have been selected by FINTRAC for audit, as of the date of this letter, make no changes to your regime, because that's called interfering with an audit, which borders on illegality. You know I have a manual. It may not be perfect, because the first year you do it, you're like, I don't quite understand all of this, but you have it. And when they come in and audit you, they can tell you to fix this up or that, and you'll be good. But make sure you do this. Don't wait till you get that letter. It's too late. Then we have a privacy compliance manual template. It's all there for you. Word format, customize it. Okay, as of November of last year, the DPA was, the privacy law was updated to include mandatory reporting for breaches. So you need to adapt to that. And these manuals need to be redone. Part of the law is that you have to go through a documented review of your regime, both privacy and AML, once at least every 2 years. And the advisors we've had who have been audited will say, that's the only thing I missed, is they wanted to see my copy from 2 years ago and the copy from 2 years before that, and I didn't have it. But they didn't throw the book at them. But you need to know that you have to say, on this date, I'm reviewing it, here's what we're changing, here's what we're adding, here's my new one. Sign off on it. That has to happen every 2 years. So now we have the approach, and here's all your templates. Your advisor disclosure, privacy consent, engagement, fact-finding, it's all there for you. You can use tools you want, but here is the guideline of what you need. And if you want to use our tools because you don't have any, they're right there, okay?